my father actually spent his entire life building bridges, like real physical bridges, from like island to island sometimes, you know, from crossing a river. And he used to take me to them and say, Aldi, when you grow up, you should spend your life building bridges. Because then you would be helping people who need it the most. You give access to people. And you know, I was never a civil engineer, so I never ended up building a real bridge. But I'm very proud and very happy today that we are building a bridge. We're building a bridge from the unbanked to banks. We're building a bridge for bedsheet makers to a market they never had access to. We're building a bridge for a housewife to sell fried chicken to the entire city. But most importantly, we're building a bridge that empowers people to help each other. Thank you very much.
China financial system, in many regards, is still quite behind, quite underdeveloped. For example, you talk about online lending. The credit infrastructure in China is still rather poor. We haven't had a credit bureau yet. Yeah, there is one in the working, and I very much hope that it will be fully functional this year or next. That can benefit the whole market tremendously. As you may know, over-indebtedness has become quite serious. So we really need credit bureau infrastructure, and the citizens need credit scores. And talking about wealth management, we can do all the great things using a mobile phone. At the same time, the whole investor community haven't developed this concept of long-term investing, value investing, asset allocation, risk diversification, so on. So these basic things need to come in place for the whole market to be really rational, right? But technology can play a key role. For example, like we can utilize technology to do more effective investor education, communication. Yeah, we used to do this face-to-face like communication, which is quite costly and boring. But utilizing technology, we can do more interesting investor communication. And also, fintech makes it possible for middle-class, mass affluent investors to receive what, in the past, only high net worth, ultra high net worth investors can receive, right? Like now, their customized financial advisor is here in their mobile phone. So we are saying that coming 5 to 10 years, Chinese middle class all have a customized financial planner, a personal financial assistant, robo-advisor in their mobile phone. If that can happen, I think that's tremendous.
So it has a market cap roughly the same size as Citigroup or HSBC. The next largest insurer is China Life at 120 and AIA at about 100. So that gives you a sense of the sort of market value scale. In terms of customer franchise, we have about 160 million financial customers, financial services customers, and in our broader digital ecosystem, now about 450 million digital users.
Can I just come back to the ecosystem word for a moment? Because that seems to me to be one of the things that sort of distinguishes the serious corporate venture capital from people who are just gambling. Because you're actually bringing people into this ecosystem. Is that how I understand it?
Well, that's totally right. I mean, first of all, we're trying to create ways of accessing clients through digital platforms, not just take our existing clients and migrate them to digital platforms. So, for example, we have the largest telematics platform in the world with about 3.3 million users. It uses mobile technology and the gyroscope in your phone to understand how fast you're going, how quickly you brake, whether you drive too closely to other cars and things like that. Half of the users of that are our customers. The other half are prospects, and we have a huge success rate in selling into the users for that platform we've created. And that can be a whole business all by itself. We have a platform called Auto Home in Beijing, which we acquired about 2 years ago, interestingly from Telstra in Australia. It's the largest auto trading website in China. It was originally basically an advertising revenue stream, and what Ping An has done as the largest car financier and the second largest car insurer is embedded those products into the experience, made them very competitive and very relevant at exactly the right time. That company is listed on the NASDAQ and has tripled in value as a consequence of that.
Wow.
Since we did that. The next layer is to create a data layer and create a whole business out of how to make use of that data, and we're still working through that. But there are a couple of examples of the ecosystem model.
Right, so this idea of embedding financial services into these new businesses, so you're becoming more of a platform really rather than a hub in some ways, is that right?
Totally. In fact, we have another business called One Connect. We've just done a capital round, raised $650 million for this company, including having SoftBank as our anchor. And what that does is take all of our technologies and makes them available as a SaaS service to other financial institutions. So we now have 400 banks in China on this platform, and we have 40 insurance companies, and we're now taking that platform international as well. So in that particular instance, it's basically a financial services platform business.
But what you referred to as the data lake that's gradually being filled up from all of these businesses, over time, that becomes as much of a core strategic asset as the money, doesn't it?
We believe that we are moving into a data economy. It's almost a cliche to talk about data as a new natural resource, but we believe that the ability to create value out of data use cases eventually becomes more important than traditional distribution, traditional brand, physical assets, and even capital itself.
So here's some numbers. And what you see with these numbers is a lot of different data. And some of it we can be very proud of, and some of it we can say, gosh, is that still happening? 2 billion people living outside the financial system. That is still happening. These are real numbers. But what I also say is, let's not dwell on the negatives of this. Let's seize the opportunity that this slide shows us. And that is absolutely what we're doing at PayPal. We are saying, when we double-click on these numbers, our mission and our vision for a truly democratized financial system is inherent in the opportunity that this creates. This isn't some utopian or idealistic creation. This is real, and this is real growth, and it's a true win-win. It's the definition of win-win in my mind. Because as we bring more people into the digital system, we create more opportunity for small businesses, we create more opportunity for consumers, we create more opportunity for financial services companies to grow and to seize that opportunity. But that won't happen unless we really have tailored customer products that really think about the customer's needs, and we have a truly collaborative and dynamic approach to how we solve those.
It isn't necessarily the tech, it's how the tech is deployed. Mm-hmm. It underscores the policy aspect of the framing things out. So shouldn't the conversation actually be how policy leads, or should we be leading with policy rather than taking cues from the tech stack itself? Yeah. Let's talk about that and why it's actually important to get really granular in this, because it is a fundamental question that has been left unanswered. It's been a regulatory overtone, but it hasn't been the interconnectivity of policy in all sorts of sectors that finance actually supports in terms of its structural integrity. Yeah. Let's talk about policy.
So I think the important thing about policy, particularly all of the different varieties that we have of it now, it's mandating change. And for a lot of the banks, it's scary because it's introducing disruption, right? And it's enabling this whole host of players to enter the field. But the interesting thing about the policy is it's basically mandating that they keep up with change. So normally what will happen, so if you look across various industries, from technology to the common example of Blockbuster, you have the incumbent, they don't change their business model, they fail to see how technology is changing their market and the consumer desires, and so they fail. And so you've seen that also from technology perspectives as well. But really within financial technology, what we're seeing is that there were technology companies who failed because they didn't move to digital. They had a desktop product. Desktop died, they didn't move. But now within banking, we're moving into a connected ecosystem, into this way where data and money and consumer relationships are entirely different. And what's interesting about the policy is that it's mandating a change that large institutions find scary, but really what it's doing is it's almost mandating them to stay competitive with fintechs. And one thing that I think is particularly fascinating, what I've learned around Singapore, is around how the government is actually wanting to create policy in which the fintechs are supporting the large banks. So it's competition, it's innovation, but in support of the traditional institutions. And I think that's quite different from policy changes and regulation we've seen somewhere like UK, where it's very much they want the competitors, the new startups, to actually be competing against the big banks. And they're not really as biased in terms of who comes out the winner or the category leader at the end.
I'd love to ask you all to introduce yourselves in a very short space of time and give us one line on why you think you deserve the chance to go into space.
Okay. My name is Augustus, and I'm from SG Innovate. I do investments and look at technology in particular. So why I want to go to space is simply, I haven't been. It's as simple as that.
Good answer.
And I think that self-interest is very important.
Self-interest.
Yes.
Interesting.
Hi, everyone. My name is Marcel. I'm an editor with Bitcoin.com. You know, technology promised us interplanetary space travel, but all we got was 140-character tweets. It's time to become a multiplanetary species.
Hi, I'm Kathy. I'm co-founder and CEO of Wafa Games. I'm a serial entrepreneur, also a rebel. Why I think I want to go to space is curiosity gets us human up to the space, but the humanity keep us part of that universe. And I think we need more fearless women up there.
Yes, I totally agree. Thank you, guys. And without further ado, I'm going to hand this piece of paper to Eunice to announce our winner.
It's okay, thank you. Wow, this is very interesting. Shall we have a little drum roll? And the person who is advancing to the formal round of interviews for Space for Humanity is, any guesses? Anybody? Any guesses? Any guesses? It's my pleasure to announce this. Kathy Gong. Yay!
Over the last 15 years, you know, I didn't really foresee it, but it looks very visionary now. But I always wanted to keep the relationship with the customer. And I fought very hard. I built our own website. We didn't work with travel agents. And I always felt that data was going to be very important. I didn't realize how revolutionary it was going to be. But I thought it was going to be very important. So we fought very hard. 80% of our business is still done on AirAsia.com. And we've been very, very protective on that. And then over the last few years, we thought, wow, there is a huge amount of value in this data that we have built up. And that's why I'm now transforming our company into a digital company, and the hundreds of things we're doing, which I'm not going to bore you with, but just talk to you about one thing as it's related to this conference, which is Money20, which is big pay. And the two founders are here. They're two young guys who are extremely hard to manage, massive egos, but extremely smart, and I'm very, very proud of them, and I'd like to introduce you to them. Salim and Chris, please stand up. Who came to me with an idea of building a disruptive bank using the amazing data that AirAsia has got, and that's our journey. It's a massive dream, but from some dreams comes some reality, and already in a very soft launch, we've done 10,000 cards. So the idea is to use all the data in AirAsia. We, of course, will take cash off the plane very soon, and you will be able to only transact on big pay. It will be developed using QR codes and NFC, et cetera, et cetera. It will be a wallet in the first step, but that's just the first step. We're going to cut exchange rate, so all our passengers will be able to save huge amounts on exchange rate when they use big pay and they travel around AIRASIA. And finally, we will also disrupt the remittance market, because a lot of our passengers remit money, and we think a lot of them are overcharged. And finally, we'll get into the money lending business, because right now, for any entrepreneur to borrow, they have to mortgage their son and their daughter to get a loan from a bank. So we believe we need to disrupt that and create more entrepreneurs going forward.
But as with crypto tokens, there is a fair amount of hype also around blockchains. The blockchain is not a panacea for all the problems of inefficiency and high cost that we face in a myriad of economic transactions and processes. It does not make sense to put everything on the blockchain. And not all the use cases currently being experimented on will succeed. But it is an experiment. These experiments are necessary because there will be some use cases that will do well. Now the bad. The anonymity of crypto tokens has unfortunately made them well-suited for facilitating illicit transactions. A significant portion of Bitcoin transactions globally is suspected to be for illicit purposes. Questions abound as to how sanctions lists, blacklists, KYC, or anti-money laundering controls apply in crypto token transactions. Crypto tokens have also unfortunately facilitated ransomware, one of the fastest growing cyber crimes. Cyber criminals inject a malware into computers and restrict their access to files, often threatening permanent data destruction unless a ransom is paid, nearly always in the form of bitcoins, which do not leave a trace. Finally, the ugly. Crypto tokens have sparked a speculative fever across the world with a vicious cycle of astronomical prices drawing a growing number of investors, which then sparks further exponential price increases. And history has shown us repeatedly, from Dutch tulips to South Sea stocks, that speculative bubbles eventually end very badly. The recent crash in prices ought to be a warning signal. But the marketing pitch by some crypto token operators is to seize the current lower prices as a great buying opportunity when prices eventually go up again. This only serves to illustrate how unstable, risky, and ugly this game has become. And investors in schemes involving crypto tokens may also be exposed to heightened risk of fraud. These schemes are often conducted online by operators whose authenticity and credibility are difficult to verify. The challenge for central banks and regulators is this: how can we harness the potentially transformative benefits of blockchain technology and crypto tokens while containing their risks?